Good morning, everyone. We will be starting in a couple of minutes. Just if you could please type a 1 into the chat window if you can hear me okay. Just want to do a quick sound check. All right, plenty of 1s. Thank you. So we'll start in a few minutes. Okay, let's get started. Good morning, everyone, and happy Friday. Welcome to today's rapid fire session. My name is Prakash Vijayanath. I am an analyst here at OptionsPlay, and today we are going to be going through some of the symbols that you all submitted earlier this week. So we have 10 ideas for you today, and a big thank you to everyone who submitted your requested symbols for this event. So I know we have quite a few new members for today's event, and I just want to give a quick run through about what today's session is about. We started the rapid fire sessions to get a better sense of the companies that our members wanted us to analyze and give our thoughts on. So we send an email at the start of the week, and we also enable a pop-up on the platform that allows members to submit a maximum of 3 symbols each. Naturally, we get hundreds and hundreds of symbols. So from there, what we do is we run them through our technical and fundamental screeners, which I will discuss in a bit. And we filter for ideas that tend to agree on both a technical and a fundamental level. There are some exceptions to that, but I'll get to that later. From there, our research team takes a look at the individual company fundamentals and also the industry outlook, and considers other factors as well to decide whether it should be included for today's event. Obviously, we do try and prioritize the symbols with the most submissions, but we also don't want to repeat the same symbols each week or each and every week, as a lot of the times, a lot of the symbols that you request, they tend to be the same ones, such as AMD, NVIDIA, Apple, which we will be going through for today's event, though, as I do see some interesting setups. But yeah, quite a lot to get through today. And before we get started, just a quick disclaimer. The types of securities, forms, and research tools used in this video are for demonstration purposes only and should not be considered a recommendation by OptionsPlay or a solicitation or an offer to buy or sell any securities. This video is not intended to be used for individual tax, legal, or investment planning advice. Now, our agenda for today, we will be starting off with a very quick, shortened market outlook, which I believe is quite important right now due to the volatility that we have been experiencing over the last couple of weeks. At the end of the day, we can analyze the individual names from a technical and a fundamental perspective, like we will be later in today's session. But it's always vital to know what's happening at a macro level. What are the systemic risks in play that will have an impact on the broader market? So we will be going over the major indices, where they're currently trading at, and get an idea of the price action and key levels to be made aware of. From there, we'll be taking a quick look at the sector rotational model, just to highlight what are the sectors that are providing leadership and what sectors are lagging relative to the overall market. From there, we'll be taking a very quick run through on how we choose the rapid fire selection process, basically. And we'll end today's session with the 10 rapid fire symbols for today's event. So starting off with the S&P 500. As we can see here, sorry, I just saw something in the chat. Can you guys hear me okay? I just want to make sure the audio is fine. Could you just type a 1 into the chat window if you can hear me? All right. I did see someone say they can't hear. Hopefully that's been resolved. But yeah, starting off with the S&P 500, and for those that didn't join my market outlook session last week, Friday, I did express some concern at this the bounce that we saw on Thursday. That it was a massive rebound all the way back to 428 key support level. Could have turned resistance, but it actually didn't. But the reason I expressed some concern about that was simply due to the fact there was no real fundamental catalyst to warrant such a large move to the upside at that time. And right now, short-term market direction is very much headline focused on the situation in Ukraine. And because of this, we are seeing a lot of volatility, but a lot of ambiguity as well. So, at first glance, yes, I do view this as encouraging price action, the fact that price is back above the 428 level. But overall, I'm not really convinced of a straight recovery all the way back to that 453 resistance level. I still think we're in for a bit more chop. We may even be in for a bit more downside here. As we can see, markets are actually set to open lower this morning. But if we take a look at the chart, over the last few days, we can see there has been a loss of momentum after last week's rebound, and price is struggling to break above that 21-day exponential moving average. My bias is shifting more to the downside. I do think this 428 level is key, but again, with so much volatility in the markets and with the S&P 500 being so headline driven, this technical levels become less important sometimes. And I do think if this level breaks, this does open the door for a revisit back to this 411 previous swing low. But if you take a look at the weekly time frame, it does also show that the 404, 405 level does offer some additional support. But overall, I am still, I do think there's maybe a bit more downside here for the S&P 500. It may not break below 411, but there is definitely a lack of momentum at current levels. And moving on to the NASDAQ 100. So very similar in terms of price action to the S&P 500, as we can see here, rejecting the 21-day exponential moving average, despite that strong rebound last week. And this again speaks to just how sensitive markets are to the headlines and to the Ukraine situation. We know equities are going to be under pressure this morning after news regarding the Ukraine power station attack that came out a few hours ago. And this points to, again, more downside here for the NASDAQ 100 and equities as a whole. So I do think the downside target here would be this previous, 316, 317 level. And if we take a look in the weekly time frame, that does align nicely with the previous support level here that was formed in April, May last year. So taking a look at small caps, the IWM Russell 2000 ETF, pretty much a very similar view to what I had last week. So, if we take a look at the weekly chart first, strong uptrend, price was range bound for pretty much a whole year, false breakout immediately followed by a very strong move lower. And you can see here, price was did find support at the 210 level. And I apologize for this screenshot, but it seems to have cut off the Fibonacci levels that I wanted to show you. But this red area, or this area here, represents the 23% fib level, and over here is a 38.2% fib level here, which is the area in focus. So we saw a strong move lower. Price did bounce exactly. Price reached the 38.2 fib level, bounced higher, but did run into resistance at this previous support level, major support level. Again, revisited the 38.2 fib level and did bounce higher again, but again, losing momentum, losing steam at this, not even at 210, at around 206, 207 area here. So I do think there is more downside here, with the obvious downside target over the next few days being 188 here for small caps. And taking a look at the VIX, so the VIX still is remaining above 30, and this for me is a very clear sign of systemic risk and contributes to my view of potentially more downside here in equities. The fact that it's above 30 and it's managing to stay elevated for this long is definitely quite concerning. It does raise the question of whether it's time to hedge your portfolio if you're not already done so. But when the VIX is this high, you do tend to see that no matter how good the technicals or the fundamentals are for a specific company, there tends to be that broad-based decline in the overall equity market. And obviously, yes, there's a few exceptions, but it is just something to be made aware of, that trading conditions, all in all, are quite volatile and a bit more unpredictable right now. So taking a look at sector rotation, right now we have 8 sectors in the improving and leading category. We have 3 sectors in the lagging and weakening category. And again, I know there's a few new members here. So for those of you that are just seeing this graph for the very first time, I'll quickly go through it. So basically, the sector relative rotation chart aims to identify rotation within sectors. And like in other words, basically, it shows which sectors of the market are investors reducing their exposure to and which sectors are they moving their money into. Here you have all 11 sectors that make up the S&P 500. And the x-axis tells us the performance relative to the benchmark, which is the S&P 500. And the y-axis basically acts as the first derivative of the x-axis and measures the rate of change of the relative strength. So this is a relative strength, this is a relative strength momentum. It's just the first derivative, measures the rate of change and basically the speed of change of relative strength. So basically there is a lagging component in this formula where, you know, if a sector is starting to outperform the overall market, it needs to outperform the overall market for a certain period for it to really start moving to the right. So the momentum, essentially, it helps us figure out, okay, so XLRE, for example, is showing good momentum. They're showing good, that means it's showing good relative strength, but it needs to show the relative strength for a longer time period for it to be moving right and into the leading category, which is starting to do. So that's basically the idea behind this relative rotation chart. And if we take a look at the sectors itself, we can see here in the leading category, we have utilities, we have staples, and we have healthcare. Now, these 3 are traditionally very defensive sectors. And again, it points to the defensive leadership, the value out of, the rotation out of growth and into value that we have been seeing over the last few weeks. So it's no surprise to see these defensive sectors providing that leadership. We also have materials here, which is simply due to the fact of the high commodity prices caused by this conflict. And if we take a look, we have energy from the weakening category showing a lot of momentum, and that comes simply off the back of the spike in oil prices that we have been seeing. Financials have had a strong rotation out of leading and out of the weakening now all the way into lagging. That's due to a drop in yields. Yields are starting to find a bit of support though. So it will be interesting to see if financials can recover somewhat. We have technology and discretionary, also sectors that do have more growth names now rotating back into the lagging category. Okay, so just to let everyone know, after the session, I will be adding a watch list onto the platform called Rapid Fire, and the date March 4th, which has all the symbols that we will be discussing for today's event. And you can access this under the watch list tab on the platform itself. And before we get started with today's rapid fire symbols, I want to go over the selection process and how we decide on what symbols to analyze further. What we do is we take all the symbols submitted and run them through our screeners. The screeners highlight which symbols meet the technical and fundamental criteria. And the technical factors that we look at, namely direction and momentum. So we want to see aligned daily and weekly momentum. We look at price and we compare it to where it's trading compared to its 21 and 55 exponential moving averages. We take a look at the relative strength to the market and to the industry, and we take a look at the price action itself, seeing where the support levels, where are those resistance levels. From a fundamental perspective, we look at earnings and valuation. We look at the short-term versus a long-term EPS and revenue trends. We look for acceleration and deceleration, which I will get into a little bit more on the next slide. We take a look at valuations. We don't want highly valued companies or bullish ideas, and especially now with this value rotation that we're seeing. And we also take a look at liquidity. We don't want to be analyzing ideas that don't have any liquidity, and there's really no point in analyzing them when you can't really enter a trade at a competitive price. So, as you can see here on the left, we have everything that's technical about our analysis. We have a chart. We have the relative performance relative to the industry, and we have this technical score here. So this is very similar to the OptionsPlay technical score. Instead of 0 to 10, it's out of 0 to 100 here, but it basically measures the performance relative to the overall market. We also have some valuation metrics there. But on the right-hand side, we have the fundamental side of the picture. So on the right-hand side, we can see here we have the trailing 12-month revenue and trailing 12-month EPS trends. And what this tells us is whether there's acceleration or deceleration in revenue and EPS. So how do you interpret this graph? Basically, as we can see, there's two lines. There's a 3-period line and there's an 8-period line. The 3-period line measures the average increase or decrease in revenue, in this case, revenue over the last 3 quarters. And the 8-period, it measures the average increase or decrease in revenue over the last 8 quarters. So what the 3-period line tells us is that over the last 3 quarters, AMD's revenues have increased by 11.6%. And over the last 8 quarters, AMD's revenues have increased by 19% on average. And that means because the 3-period is lower than the 8-period, AMD is actually showing a deceleration in revenue growth. And a similar concept for EPS. As we can see here, over the last 3 periods, EPS has shrunk on average by 4% per quarter. And over the last 8 periods, EPS has grown by 100% per quarter on average. So there's a significant deceleration in terms of EPS for AMD. Now, the other thing that I wanted to highlight was the numbers itself. So the numbers represent the trailing 12-month improvement, or trailing 12-month performance, I should say. And basically, this number here from the 31st of December is measured against the number 12 months previously, which was 31st of December 2020. And it just measures the performance relative to a year ago, and same for the EPS. I will say for the EPS, you can see the percentages are quite high, and that just comes down to the fact that it's based on very low multiples 12 months ago at the beginning, from 8 periods ago. So I wouldn't pay too much attention to the percentages for the EPS, but I would be looking at the 3-period and the 8-period slope. So our first idea for today is AMD, and there's a lot of expectation for AMD for rapid market share gain in the data center space right now. We know AMD and Meta are partnered up for data centers, and with Meta increasing capex by 65% this year, this does bode quite well for AMD, and it's definitely one of the my favorite names to look at right now. And we did already go over the revenue and EPS trends. We do see a bit of a deceleration in revenue. We do see a bit of a deceleration in EPS, but overall, I do think that the business case here for AMD is going to be quite strong for this year. And I do have a bullish case here for AMD overall. I don't think, the deceleration for revenue and EPS are a major concern. If we take a look at the technicals though, you can see here that AMD's technical score is between a 4 and a 5 out of 10. So pretty average performance relative to the market and fairly flat performance relative to the semiconductor industry. But the chart itself, you can see here that there is a major support level at this $100 level, and price did reach 160 and has since been on a downtrend. It did bounce off this $100 level. It tested its exponential moving averages, which, by the way, the pink exponential moving average is a 55-day exponential moving average, and the 21-day exponential moving average is the green line. And you can see that it did somewhat reject those moving averages, and it is heading lower. But for me, AMD is definitely a medium to a longer term bet. And I do think that we need some wiggle room here for AMD. There should be some space for AMD to move lower here, maybe back to this 100 level support, which is proven to be a major support level. And that does provide a much better risk to reward entry, long entry for continuation higher, with the next minor resistance level that I see being at 130 or so. But overall, definitely a bit more of a bullish picture for AMD, but I do think patience is required here. And taking a look at NVIDIA. So NVIDIA obviously has a very similar case to AMD, very similar company, very strong growth potential also on the data center side, as there's a lot of appetite for cloud customers to invest in GPU capabilities. And if we take a look, starting off with the fundamentals, We can see here there has been a bit of a deceleration in both revenue and EPS. Revenue over the last 3 periods has only grown by 11.5% compared to 18.8% over the last 8 periods. So a slight deceleration there. And same for its EPS, grown at 18.6% over the last 3 periods compared to 27.7% over the last 8 periods per quarter. So deceleration on both the revenue and EPS trends, but I wouldn't say there's an unhealthy deceleration. Not a major concern for me, just simply because of the business case for NVIDIA. And if we take a look at the technical side of the picture, we can see here its technical score around a 6 out of 10. So pretty average as well, pretty neutral technical score. And same for its performance relative to industry, fairly flat here, but somewhat improving here over since December, as we can see, starting to tick higher. Looking at the chart itself, there is a bit of a support area at around this 206 to 210 level. Price did already form a double bottom there. And right now, price is running into some resistance at the 21-day exponential moving average. So we may see a revisit back to this area before a continuation higher. But overall, I am still quite bullish on NVIDIA. I do think it has a good business case, a good fundamental case, looking into the next, into the medium term, into the long term for the next 12 months or even longer. And I do think that if we do see a bit of a pullback here in price back to this 206 level, it does once again provide a much better risk reward bullish entry. But again, patience is required for this one, I think. So next we have Apple. Apple, has the business case for Apple is quite strong. It has a very high customer retention rate, and it's still growing its total addressable market. Well, the total addressable market is still growing. So, if you throw in a stable replacement cycle for 5G expansion and strong free cash flow, there is a good, decent fundamental case here for Apple for the medium to the long term. If we take a look at its revenue and EPS charts, we can see here that over the last 3 periods, revenues has slightly decelerated, only growing at around 4.5% on average over the last 3 quarters compared to 6.65% over the last 8 quarters. And in terms of EPS, around 9% over the last 3 quarters on average compared to 14% over the last 8 quarters on average. So we are seeing deceleration here again in terms of revenue and EPS. I mean, revenue deceleration across the board was expected because it's hard to compete with the revenue growth for S&P 500 companies since beginning of last year. But overall, I don't view this as an unhealthy deceleration. And I think Apple is still doing quite well. And if we take a look at the performance here on the left-hand side, 7 out of 10 technical score. So good performance relative to the overall market and very strong performance relative to the computer hardware industry. And taking a look at the chart itself, I do see a bit of a, let's call it a key range here between 150 and around 155 or so, where price has found support and it has provided resistance in the past on multiple occasions. And we can see here more recently, price had found support, moved higher with a lot of momentum, and now it is breaking. It did break above its exponential moving averages yesterday, close below, but even if we see a bit more downside, if these support levels can hold, I do think that provides a case for a revisit back to even the 180 level, with the fundamentals being as good as they are right now for Apple. So moving on to Freeport-McMoRan. So FCX is a materials company that specializes in copper, and the business case for Freeport is very, very strong, even without the fact that the conflict in Ukraine has seen copper prices increase. There is a high global demand for copper, and most likely will be for the long term. So they have strong free cash flow at the moment, and with their CapEx initiatives, especially in Indonesia, they do have a very attractive return profile here for shareholders. I do think FCX has a very potential solid long-term case in terms of fundamentals. And if we take a look at its revenue over the last 3 periods, revenues have accelerated, growing on average over the last 3 periods at 11.5% compared to 10% on average over the last 8 periods. Same for, not same for EPS. EPS has decelerated a bit from 103% on average over the last 8 quarters to 25.6% over the last 3 quarters. So a bit of deceleration in terms of EPS growth, but also 103% is a tough target to achieve. But revenue growth still improving steadily and accelerating. So I do view this as, quite a positive from a fundamental perspective. If we take a look at the chart itself, there was an error with the performance relative to the industry. But if you take a look at performance relative to the overall market, technical score of pretty much a 10 out of 10. So very strong against the overall market. And if we take a look at price action itself, price has now broken above this 45 major resistance level with a lot of momentum. So in terms of an entry point, I don't really like looking at a name that's at an all-time high. I would much prefer to wait for that pullback, maybe back to this 45 level, wait for some bullish price action, and before looking at entering a long position for continuation higher here for FCX. So next we have Block. I was going to call it Square for a second. So Block helps facilitate payments transactions for customers, but also offers an extended suite of financial and marketing services for them as well. So if we take a look at the fundamentals here, we do see a fairly significant deceleration in revenue and EPS. In terms of the revenue deceleration over the last 8 periods, revenues were growing at around nearly 40% on average per quarter over the last 8 quarters, compared to around 5.4% over the last 3 quarters. So significant deceleration there in terms of revenue growth. And in terms of EPS growth, EPS over the last 8 quarters was growing at nearly 4%, but now it's losing 36.6% over the last 3 quarters on average. So both on the revenue side and on the EPS side, not a great picture there. If we take a look at its performance relative to the overall market, technical score of around a 1 out of 10, which is severely underperforming the overall market and severely underperforming the computer services sub-industry. Price action itself, as we can see, there has been a bit of a topping formation. This 200 level was a bit of a support level. Price broke above that and did start to move sideways, form this topping formation with a resistance level at around 275, but broke below 200 with a lot of bearish momentum behind that, and even broke below this 130, 131 minus support level, I would call it. And as we can see here, price did decline all the way to 83, found some support, came back to retest the 130, 131 area, but it's now failing at that level. And I think this provides a good risk to reward bearish entry. Definitely a bit more of a very short duration trade. And the target here would be around this 83, 82 level also, but quite a bearish outlook here for Block. So taking a look at Take-Two, which is a video game developer. And in terms of the video game industry itself, Take-Two is well positioned for the long term, but over the short term, it is considered to be a lot more riskier. And that just simply comes down to the fact that it's very reliant on the GTA franchise, as opposed to its peers, such as its peers, which are Electronic Arts and Activision, that have a much more diversified product range or game range here. So overall, I do think that there's a bit more of a bearish case here for Take-Two. And if we take a look at its revenue, pretty much flat. So over the last 8 periods, revenues grew on average 0.88% compared to the last 3 periods where it's 0.89%. So no change for the revenue growth. And in terms of EPS growth, that has definitely turned negative, as we can see, losing around 9.8% over the last 3 periods compared to gaining 5.6% over the last 8 periods. So from a fundamental perspective, not great. But if we take a look at the technical side of the picture, technical score of around a 4 out of 10. So it is underperforming the overall market. And even relative to its industry, it is picking up relative to its industry, but not at a great pace. So I wouldn't really view this as a positive. Price action wise itself, we can see there's a descending trend line here for Take-Two. And once again, price did break below its exponential moving averages a few days ago, came back to retest it as failing there. So I do think there's potentially more downside, especially with price breaking below this 160 minus support level. Potential targets would be these swing lows at around 140, 145 or so. This range would be the short-term target. So again, another really short duration trade setup or short duration analysis here for take two, but it is, forming higher lows, lower lows and lower highs. So I do think from a risk to reward perspective, it is a good entry point at current levels. So moving on to Salesforce. So Salesforce, they're a giant in the customer relationship management software space. And if we take a look at, start off with the technicals first for this one, we can see that technical score of around between a 1 and a 2 out of 10, so very poor against the overall market. And again, this long-term underperformance relative to the software industry. Taking a look at the chart itself, we saw ever since price, reached that 300 area, it's been on a very strong bearish trend. But what was concerning was a break below this, let's call it 210 area. Price did come back to retest it and it's failing there. And price action is quite bearish currently. So I do think there's more downside here for Salesforce. And the target here would be just about at around, let's say 180, 185, this previous swing low, this area here. So again, very short-term duration trade, but that's with markets being so volatile and ambiguous, these are the types of setups that we are looking at. Taking a look at the fundamentals though for Salesforce, we can see here slight deceleration in terms of revenue growth from 6.38% over the last 8 quarters to around 5.9% over the last 3 quarters. So I wouldn't say the revenue deceleration is too concerning, but its EPS deceleration is, when you can see over the last 8 periods, was gaining at 184% over the last 8 quarters compared to 31% on average, losing 31% on average over the last 3 quarters. So a significant decline, deceleration here in terms of EPS. And the technical picture doesn't look too promising. So I do think there's further downside here for Salesforce. Next, we have Home Depot, which, if we take a look at the fundamentals, we are seeing a bit of a deceleration in the last 3 periods, 2.33% revenue growth on average compared to 5.11% over the last 8 quarters. And in terms of EPS as well, 4.5% over the last 3 quarters on average compared to 8.05% over the last 8 quarters. So a bit of deceleration on both the revenue and EPS side. Taking a look at the technical side, we can see here performance relative to the market has been declining. And again, performance relative to the home improvement retail space also declining quite sharply recently. Price action wise, price did break below this 340 previous resistance level. A lot of bearish momentum, but it did find support at 300. So there was some support, there was some bullish price action. Price was inching its way back to the 340 level. And I think it's looking like price is back within this range between 340 and 300. And we may see a bit more upside back to 340, but overall, my outlook here for the home improvement retail space, even the sub-industry itself, is quite bearish. And I do think that will provide an excellent bearish opportunity for a revisit of that 300 level or so. Next, we have Live Nation. And Live Nation is a leading event promoter along with ticketing, and it also does some artist management as well. And this is a bit of a reopening play as live events are back on the cards worldwide, and that there is a lot of pent-up demand resulting from the lockdown and the fact that events were not allowed. So if we take a look at the revenues itself, we can see here there has been significant acceleration in terms of revenues over the last 3 periods. Revenues have grown at almost 200% per quarter over the last 3 quarters compared to declining 7% over the last 8 quarters. And even for EPS, after losing around 32% on average over the last 8 quarters, it is now gaining 27.3% over the last 3 quarters. So good acceleration on both the EPS and the revenue front. And performance relative to the overall market, very strong, almost I said a 9 out of 10. So outperforming the overall market and strong outperformance relative to the entertainment industry. But if we take a look at the chart itself, I will say that price is pretty much at a bit of a no a bit of a gray area at the moment. You can see here, there's definitely a bit of a range-bound market for Live Nation between 125 resistance and 100 support. And I do think we may need to be a bit patient in terms of looking for an entry point. There's two entry points that I would consider for a bullish setup. One would be a pullback back to this $100 support level, maybe some bullish price action that would give me the encouragement to go for a bullish idea here, with the target being at 125, or a break above 125 to new all-time highs. But these two, the 125 and the 100 level, are the key levels that I'd be looking at for potential bullish setups. So I don't think right now, with price trading in the middle, I don't believe that's the right time to go long here on Live Nation. And taking a look at Lululemon. So Lululemon is a leading specialty retailer with a focus on athletic apparel, and it is considered to be one of the best in class in the industry. So if we take a look at the technical side of things, this is the weekly chart for Lululemon. And I think it just provides a much better outlook here compared to the daily chart. Starting off with its technical score, around a 2 out of 10, I should say, and slightly improving, showing signs of improving, but definitely has been underperforming the overall market more recently. But I do think when you look at the chart itself, there's some evidence here of a potential bounce. But if we take a look at its performance relative to the clothing and accessories sub-industry, we can see that there has been decent performance. It hasn't been completely outperforming, but has definitely been above average. We can see hopefully it starts to tick up higher against the overall clothing and accessories sub-industry. The price action, though, I do think there's a clear support level at around this 300 area. As we can see, price has bounced off this area on multiple occasions. And despite this strong downtrend that we've experienced over the last few months, price is now starting to find support and is showing signs of a reversal. So from a risk to reward perspective, I do think this is a very good entry point for Lululemon for potential move higher. And in terms of possible targets, I'd be looking at the 400 level, which has acted as resistance in the past. And should that level break, we'd be looking at around 450, 460 or so. But a good bullish setup here for Lululemon, in my opinion. And with that, that concludes our session for today. I do want to finish off by saying a big thank you to our members for allowing us to do these sessions. It's something that we really enjoy doing, and I hope you have a great trading day and a great weekend. And I will see you next Friday for our market outlook session. Thank you.
Hey there, thank you so much for watching. I really hope that you enjoyed today's session. If you want to watch the full recording and all of the market mover symbols that I covered today, register for an account at OptionsPlay.com. You will access my daily trading signals to follow along and weekly options education sessions to improve your trading skills, and gain full access to our platform to analyze the risks, rewards, and probabilities for any trade. Regardless of where your ideas originated from, filter them out with OptionsPlay and start gaining confidence in your trades with our platform. And the best part is that you can start completely free with a 30-day trial. Click on the link in the description below to learn more. And as always, have a great trading day.